Well, hello and welcome back to Stockbox here live from Resourcing Tomorrow for the last day. And I'm joined by Doug Gramshaw, the president of Minera Alamos. Thank you very much for joining us, Doug.
Yeah,
How are
good
you?
to see you again, Mark. Yeah, I'm great. It's been a great conference.
Well, we met a year ago.
We did.
Didn't we? And of course, we caught up, I think, a couple of weeks later online, but it's been pretty much a year since we spoke. I just want to get a catch-up really on what's happened throughout the course of the year. Now, as I remember, you're specialising in low capital intensity gold mining project focused on development and production rather than exploration. Your strategy is to minimise reliance on equity markets, avoiding dilution and generate free cash flow to fund growth.
Right.
You have a few different projects, don't you? So the Santana project, first of all,
yes,
as we spoke last time, it was built during the pandemic.
It was
10 million. Yeah, produces 20,000 ounces roughly.
Well, that's its design capacity. It's we're actually 2023 was a bit of a lost year. If you remember, we were waiting on permit amendments down there. There was still the tail end of a drought, so we made the tough decision to kind of scale back production in 2023. Now we've got mining up and running again in 2024. So it will be kicking off free cash flow again in 2025, which is not that long away.
So yes, you scale back the production. Have you scaled that back up on full production, or
we're getting close to it. In the first iteration of Santana it's a small mine, 25,000 ounces a year. So in Q3 we were getting close to kind of a 20,000 ounce mining rate on a run rate basis. So, and it's still starting to scale up. We're opening up a brand new pit, so it takes time for a pit to open up, so you've got full access for your fleet and the like. So 2025 should be better for Santana, and really 2024, since we last met, was kind of a transition year for us between what was pretty much a dead year in 2023 to what should be a very exciting year in 2025, and this is kind of this transition year between the two.
Okay, good. Yeah. So you said it's going to start throwing off free cash flow. Is that still in the region of 8 to 10 million Canadian?
It should be. As it gets up to full capacity, it should be there or thereabouts. Yeah.
Okay, that's about 4,000 to 5,000 ounces a quarter.
That's where we want to get it up to. Yeah, and it'll probably it will always, a new mine like that will always take time to ramp up. Yeah, unfortunately, it's not like a milling operation where you flip a switch and you get a very quick return on the gold coming back from the system. With heap leach, there's a time lag as the leach cycle takes hold on the pad between when you mine and stack and when the gold actually comes off and is sold. So it takes a little while to ramp up.
Okay, but that's actually started now. That ramp up process is going through, so we can expect H1 just to see that continue to ramp up effectively. Okay.
Yeah, that's basically the goal.
Okay, good. Well, let's talk a little bit about La Fortuna then, the other project you have there. So that was permitted but required additional exploration and drilling to expand its resource base and justify a longer mine life. The current estimate 3 to 4 grams per ton gold with potential upside for future development. So you're still looking around that?
It's a spectacular open pit. It's a 3.5 gram open pit, 6-to-1 strip. But the project only has a 5-year mine life on this high-grade starter pit we did. And so we always, even though it's got its permits, we wanted to make it bigger before we built it. And that's why Cerro de Oro jumped ahead of it in the development queue, even though we had to permit Cerro de Oro, and you're sitting there with a permitted Fortuna. So, but we haven't changed that strategy. We do think that it's better to build the right version of Fortuna, which should be a bigger mine than what's presented in the PEA. But it's a spectacular one when we come around to building it. I mean, back in 2018, that PEA had sub $500 AISC cost. So even if the AISC is up 60% since 2018, which I don't think it would be, it's a well under $1,000 an ounce AISC project. So not only do we build projects with industry-leading low capital intensity, they actually, against the industry cost curve now, which has been rising, these are sub $1,000 ounce projects. That means in a declining gold market, which would leave a lot of companies pretty exposed, our margins can still, at a $2,000 gold market, we've still got $1,000 an ounce operating margin, which is spectacular.
So on Fortuna, then has that sort of not developed a lot?
No, we really haven't done much. Everything's been on Cerro de Oro and restarting Santana.
Okay. And I think you mentioned last year that stress tests, I think generally were around 1,250 ounces, dollars ounce of gold. So of course the gold price has performed extremely well. throughout the course of 2024. So you're in a pretty strong, much more stronger position, really, on when it comes to the margins here.
Yeah, I mean, you want to make sure that your mines work in a bad gold market. Take advantage of a good one. So yeah, we stress test everything at $1,250, $1,300 gold, and they still work. Like Cerro de Oro has a 40% IRR at $1,250 gold.
Right.
It just happens to have 111% IRR at $1,600 gold. And I don't even want to do the calculation of where it is at spot. And I don't think we should. We shouldn't be building mines because of a certain spot price on a certain month or year. We should be testing these things to ensure that they withstand periods of lower gold prices as well. That's what investors are going to want to see, consistency in your ability to generate cash, not having to pick those spots where the industry is making hay while the sun shines, but you can have 4 or 5 years of moribund prices, and there's an opportunity cost of then being stuck in a gold sector that's not making money. Right?
Okay. Well, the vibe I've got from talking to lots of different people over the course of these last 2 days, that there's a lot of commodities that are looking good, but I've heard time and time again, gold and silver effectively have got a good few years ahead of them now. That's definitely the vibe I picked up. I don't know what your sort of take on that is.
See, yeah, I get the general sentiment is that gold's still got further to move, and I hope that's the case.
Yeah.
But I think I'm going into it there. I look at it as, but what can upset that sentiment?
Yeah.
So if you think about the recent re-election of Donald Trump, and a lot of the policies he's proposing can be quite inflationary in the U.S. economy, and so can gold have the rug pulled out from underneath it, despite all this positive sentiment, if the Fed kind of pauses rate cutting, to try to get ahead of perhaps some rising inflation, or heaven forbid, actually starts raising rates again, if inflation gets a little out of control. And there is that danger for sure. And so I think I always want to plan things on a worst case scenario, and be pleasantly surprised at my pessimistic approach to where things are going, because gold has a habit of, when everything seems to be going fine, it just of disappointing still. I mean, even now, it's funny because gold benefits from inflationary times. So physical gold has been great, but from a miner's perspective, and they've had a good run this year, that inflation is also impacts costs. So the margin expansion isn't quite where you want it to be, given we're at $2,700 gold. So no, I think as companies, but also as investors, we shouldn't get caught up in euphoria and positive sentiment. We should actually think about the what ifs and make our investment choices, either as corporately and what projects we want to go after, or as investors on a question of, but what if it isn't all unicorns and rainbows? How do I protect myself in that regard? And so I think our business model serves us corporately and our shareholders very well for being able to function in wherever the gold price chooses to settle. And I'm not one of those guys that gets out my crystal ball and makes guesses in that regard.
Well, it's good that you're thinking about that, though, isn't it? Taking sort of the worst case scenario effectively, because you can get overly optimistic, particularly in the mining sector. So maintaining you've got to be an optimist, but also going for the pessimistic side of it, or the worst case scenario.
And I am optimistic, but I mean, I think, it's very easy to get trapped into, but you're chalking your own book, or you're wearing rose-colored glasses or whatever. So you have to look at the dynamics driving this from all angles, and then probably approach things from the most pessimistic one, and that will actually serve you better.
Exactly. Let's just talk, if we can, a little bit about the sort of financial situation. I appreciate you might not be able to say a lot on that, but from our chat last year, I think we were talking about you maintained a circa 20 million working capital throughout the course of the year, and expecting to end the year, that's last year, with circa 10 to 11 million. So, I mean, how are you looking on that front as we end 2024 now?
Well, we did just, so we're going to finish this year, because we've been waiting on permits in Mexico. Patience, that's great, but it does come at a cost. Over the last couple of years, waiting on permits, and I'm glad to say that sentiment is shifting in Mexico, and I think we're going to start seeing permits flow in 2025 after a couple of years where everything ground to a halt. So that does have a cost on the balance sheet. We just completed, actually today, I announced a bought deal, just a modest $8.5 million bought deal financing, couple of weeks ago that closed today. So we'll finish the year with about 13 million in cash, somewhere like that. But the uptick in mining at Santana, I had to make a decision that do we thread the needle?
Sure.
And if everything goes perfectly, maybe we don't need to do an equity raise.
Yeah.
But if we're wrong, then it could be disastrous. So a little prudent dilution. It was our first raise in 2.5 years. We're very, very good. I think that's why I actually shocked some investors. It's like, yeah, we're punished because if we're a serial financier, it's like, oh, here they go again, raising more money. We hadn't done a raise in 2.5 years. We do a small one to, I think, prudently de-risk the balance sheet, especially with everything we've got ahead of us in a very active 2025. So we'll finish the year with about 13.5 million in cash flow starting to come from Santana to further bolster that, and probably circa $15.5 million in working capital. So that's a good position to enter the year, and I wasn't comfortable not getting this modest raise in just to ensure that we've got the right forward-looking view with our balance sheet.
So let's say everything does go well at Santana. Is the idea then to use that cash flow to sort of reinvest into the other projects then?
Yeah, certainly to support like Cerro de Oro, that if the permits drop, we've got a funding package lined up.
Yes,
And if we, but I think you always want to have your own source of additional capital to support the any potential overruns or whatever it might be, or other initiatives the company is doing. So Santana contributing to our treasury next year is important. But we also already have project finance lined up for Cerro de Oro.
And that was lined up quite a while ago, wasn't it?
Yeah, it was. Yeah, in preparation for permits.
Right. Okay.
We have recently announced the acquisition of a company called Saber Gold Mines that has a project in Arizona just across the border. And that gives us some, again, it's corporate de-risking. It means that we can advance that one with appropriate project finance to be in production in early 2026. If Mexico is a little slower than we're anticipating, that one's still going to get built. If Mexico speeds up, we've got a team in Mexico to build Cerro de Oro. So we're going to enter 2026 either with 1 new mine or 2 new mines. So again, that's like making sure the balance sheet for that kind of busy year ahead, you just want to make sure that you've got everything at your disposal.
So Santana project number 1, get that ramped up throughout H1. Then you're going to start looking at Cerro de Oro.
Yeah. In parallel with Copperstone, the new acquisition, which will close third week of January.
So the new acquisition, so it's a copper, you diversify.
Well, no, it's called Copperstone, but it's a gold mine. It's a historic 500,000 ounces were produced from an open pit there in La Paz County, Arizona. It's a fully permitted plan of our operations to restart, but it's a 500,000 ounce underground deposit, grading around a diluted grade of about 8 grams in the underground. We inherit $25 million US of sunk surface infrastructure and underground development. There's 2 portals, 4,000 meters of underground mine development. So it's a low capex restart. It's maybe $30 million to get that up and running. And it will produce about 40,000 ounces a year for 6 years in its initial form. And there's a lot of exploration upside beyond that. But, you know, we're looking at that first 6 years as giving us enough of a runway to then put cash flow back from the operation into seeing how much we can expand it beyond that. So excited that we have something complementary to what we've got just south of the border in Mexico, that we've got self-determination to drive into production, regardless of whether Mexico is slow or fast in 2025 on moving permits forward.
And that was called Copper?
It's Copperstone. It's a project.
So when you say potentially 2 more extra mines, you're talking
Copperstone and Cerro de Oro.
And La Fortuna's just...
It will wait. We'll put exploration into that from the cash flow of the other operations in due course.
Okay, good. Awesome. Now, last year, I know you talked about sort of the constraints in the market. Now, you've obviously got a raise away, so you managed to get that away, so that's great. You sort of bolstered your position there. Just generally to finish off, how have you felt generally 2024 has been for sort of interest in the space, liquidity in the space? And how do you think it's setting up for you going into, well, you're in production, but ramping up production, getting into further production for the next, let's say, 2 to 3 years, really?
Yeah, I think we're set up nicely for 2025. This year has been a challenge. I mean, if you're a developer, there's been an opportunity cost of staying loyal to a story. We've had big buying that's been coming in from US family offices and high net worth individuals who see the value proposition here. But I think there have been real headwinds for developers this year because the gold producers are moving with the gold price. So for the first time in 3 years, there was an opportunity cost of staying with a developer, staying loyal to that. But I also think because of the lagging nature of developers, we actually have more of a chance to outperform next year. I think the gold producers can only continue their kind of growth if gold price keeps moving. When we don't know what's going to happen there, and if it pulls back, you know, their performance is going to come off. Whereas the gold developers, their holy grail they're looking for are permits. As permits drop, they get the re-rate off that. And I think 2025 could be a very, very good year for gold developers. I mean, certainly, I hope that's the case, because I think our shareholders deserve a good year ahead of them, and we're trying to set up the company to do precisely that.
Yeah, I think investors are well overdue some decent wins in this sector. But
exactly.
For now, I know you've got plenty of meetings lined up, so thank you, Doug Ramshaw, the president of Minera Alamos, for your time today.
Appreciate it
very much. Thank you. And stay tuned for more.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.